Welcome to this last Capital Spreads weekly update of 2010. Today is the 22nd of December, and the week so far has been very strong, continuing as the December rally does still attract bulls to the market. It looks like this rise in equity markets just simply isn't going to run out of steam, and there's every possibility that we could continue to rally into the new year. So we're up some 1.7% so far in the FTSE 100, and looking at the FTSE 250, that's not all that far off actually marking a record high, a higher level than what it marked back in May 2007. And really the market's been fueled by an increase in merger and acquisition activity. We saw this week Ladbrokes looking like it's going to try and bid for 888, and there's also a shift in sentiment in the bond market. We've seen yields in bonds jump quite significantly. Therefore bond prices have fallen, and what that signals is a change in sentiment. It shows that possibly people are expecting interest rates maybe are going to have to consider rising earlier than expected in 2011, because the situation with certainly the US economy looks stronger. We're seeing the Bush tax breaks being extended by Obama, so a lot of people have revised their growth targets for the US upwards in 2011. And generally on the whole economic data has been pretty good in the latter part of this year. That wouldn't be the case certainly for UK GDP, which is still looking good, but just today we saw UK GDP revised downwards, but actually conversely for the US we saw GDP figures revised upwards. So the growth still looks relatively robust, and that's why we're seeing this strength continue in global equity markets, and that's why we've seen the FTSE mark a new closing high for 2010, and now we are literally only just some 20 points or so off that magical 6,000 level in the FTSE 100. So the current situation is at around 59.75 in the FTSE. We're around 11,540 in the Dow, and currency markets again fluctuating a little bit. The euro dollar is around 130.90, and cable again just being marked down a little bit. Certainly today that revision downwards in GDP has taken its toll, so we're down to 154.00 in cable. And the recent sort of slight uptick in the dollar is just meaning that gold still struggles below 1400. It's around 1386 at the moment. So what I've got here for you is a FTSE chart. It's an hourly chart over the month of December, and it just goes to illustrate that strength in the FTSE, which seems to be continuing. And I've sort of shown how it really struggled around 5,900 for quite some time on quite a few attempts, but then eventually broke through that. Now clients have been continuing to buck that trend. They've been opposing that trend by selling into this strength, and by you can see from the RSI the market has been overbought for quite some time. So it shows how not always do these signals on things like the RSI work, and it's now gone even further beyond there. So we can probably expect the 5,900 level now to offer up a great deal of support should we retrace to that level going forward. But you know, the market is looking, according to the RSI, overbought, but still that strength continues. So clients are still selling into the FTSE, they're still selling into the S&P, opposing that trend. On the currencies, they're long the sterling dollar, so they're long cable, and again slightly opposing the trend in cable, but a trend that they continue to see further strength in is gold. Obviously the clients are long gold, and they're long oil as well, which has shown a little bit of strength recently. What does the rest of the week have in store? Well, really probably the main focus for the rest of the week is the initial jobless claims out in the US tomorrow, and then of course Friday we really very much wind up for Christmas. So the theme of this week and the last theme of the week for 2010 Will this rally continue into 2011? Let's face it, we've got all sorts of headwinds. We've got rising inflation, we've got GDP or growth that may struggle in the face of higher taxes and austerity, reduction in government spending and job losses. So there's a lot of headwinds for equity markets, but we're still seeing corporations have better balance sheets now. They've come out of this recession better than most other recessions after a lot of cost reduction, and so that should come through and be reflected in earnings. So there's every chance that this possibility that this rally could continue into 2011 and beyond. But of course, that doesn't mean that we're not going to get any knee-jerk sell-offs and retracements during that time. So that's it for this week, and that's it for 2010. As ever, do give us feedback, but I'd like to take this opportunity to wish you a very Merry Christmas and a very prosperous and happy New Year.